Hello everyone, welcome to my channel. So today our focus is going to be how to trade boom and crash with trend line breakout strategy. So let's dive into it. Just like every other financial instrument, for you to maintain a good level of success and consistency, you need to look at the market from a higher time frame, right? So you can see our chart here. We are on day one. We are trying to find a trend line breakout. Now for this to be established, there has to be a dominant trend that has existed for quite some time, and you are hoping there will be a breakout so that you could take advantage of that breakout in the trend line. So what we'll do first is we change our data to a line chart and we shrink our chart. The reason we do this is because we want to see the market from a large perspective so that we'll be able to draw a decent trend line. So pick our trend line, and remember, just like I talked about in my previous video, you are looking for places where there are multiple touches, like a price where price touches the line multiple times. So this is 1, 2, 3, 4, and you can see how they all align, right? Let me show you. This is 1, this is 2, this is 3, and this is 4. So with this is a go, this is a pass, right? Put it back to candlesticks. You can see how clean this touches are. You know, you could actually trade on this after the first touch. This is a lower high, a lower high. You know, you could actually trade on this, but that's not what we're talking about. We're talking about the trade line breakout. This is our focus at the moment. So at this point, you can easily see where the breakout took place, right? You can see where the breakouts took place. Let me map that out for you. Now, when you're choosing your breakout, the place where the breakout happened, you are not just choosing a zone or a level. You are making sure those levels that are being shown are levels that has multiple support and resistance. So I'm going to change this back to my line chart right here, and right after the breakout, when you drop your what do they call it, your horizontal line, you want to see that there are multiple touches. This is 1, this is 2, this should be 3. When you change it to your candles, you will see a wick there. Yes, so this can be counted as 1 as well. So 1, this is 2. We map it out for you. This is 1, this is 2, this whole zone is 3. Now there are multiple consolidations there. So now we've established that. Now after the breakout from right here, there was an obvious breakout, right? After the breakout, it is ideal for price to retrace back to the level where the breakout took place, right here. So at the retracement of price back to this level, this is where you are now looking out for market opportunities. In my previous video, because I was in trend with the market, I was not against the trend. I was looking at it from larger time, from daily chart. So I was looking at trading with trend. We are looking at for chart patterns in my other video, but in this video our focus is going to be rather on candlestick patterns, not chart patterns, because we are not really with the trend. If when you zoom out, you get to see that the market is on a dominant bearish trend. You can see that the overall trend, it's a downtrend. So what we are just doing now, it's a minor retracement, but this minor retracement is going to go a long way because the minor retracement is happening on a daily chart. So I'm going to map out this level where the retracement happened. Keep making this mistake. So this is where the retracement happened. Remember, I say you're looking out for candlesticks patterns, right? That's what you're looking out for. So So you're looking out for candlestick patterns. You're looking for the hammer, the engulfing candle. There are other candles that shows that the market has started moving in its direction. So we're going to go to a lower time frame. This is an application of top-down market analysis from higher time frame to lower time frame. So we're going to go on our H4 to look out for what will happen on that level where price will trace to. Now, when price will trace to this level, right? Oh my God, there's even one here. there's something that happened here after this breakout on 4 hours. We didn't take this one, but it's okay. You could as well plan on this. If you're quick, you're able to tell that there are multiple touches here too, right? And on the breakout of it and the retrace, market structure is everything. You need to, guys, you need to understand market structure and price action. This is why below this video I'm going to drop a link. I'm going to drop probably more than one link for you to go read up about market structure and price action. It's going to do you much good. You understand market psychology, the concept of trading, any financial instrument. So you can see the movement here. It was really clean, really clean. Just there was a breakout in coffee candle. There was a little retracement, and it kept going up. So that's established. Then okay, then when it came back here, this is what happened. There was another candle. This is a bullish candle after a pin bar hammer was formed. The last bearish candle that gave up the ghost before a candlestick pattern was formed. Voila, market went that way. So for you to know where to exit the market, you just have to switch back to your line chart and look for resistance level. You can pick this level. Yep, see where this level here, you can see right here there are multiple touches here. Journey to your candlesticks, you're going to see how important these areas are. So this is why price got to this level, and that was the end of the move. Also, you can also pick out look out for, you can use your Fibonacci to pick out levels. The Fibonacci, you have a retracement level and have the reversal level. So you're looking for a reversal level. So if I pick my Fibonacci, I can pick it from the most recent high where you have a double top, drag it down to the lowest point here. So I drag it down from here to here. Saw that, right? Now look at how it tallied with the highest level, 161.8. This is your first reversal level, 127. This is the second one, 141, and the third one is 161.8. There are 3 reversal levels, just as there are 3 retracement levels, 38.2, 50, 61.8. So that is that. So guys, I hope that was simple enough for you to understand. And it didn't stop there. After price got to that level, price retraced, got back here, and there was another engulfing candle within that zone. And what happened? Markets rallied up again. So you can see how accurate this method is. Okay, before this video gets too long, I think I'll have to show you just yet another one. Let's see. Okay, here's another one. Okay, we've talked about 500. You can try this out on your own. Let's go to crash 500 and see what happens. If you can see, spot any good entry. Okay, I think here is one. Shrink your chart, change it to line charts. You can see. Let's use this one. Multiple touches, right? Multiple touches, and there you have it. There's a breakout there. You can see the breakout right here, and we're waiting for the retracement. This is where you pick out your horizontal line, look for your multiple touches again after it has broken out of the trend line. This is my multiple touch. Why did I choose that level? There's a double top here. This whole zone. Just map out this whole zone. Right? See how clear. So you're expecting that when the market gets back to this level, you're expecting a bullish trend. So this is where you map it out. Okay, remember, you don't take your place your trade on a daily chart. Go on the lower time frame. You can go as low as 1 hour, depending on what you're looking for. So in this case, I went on a 4-hour chart, and guess what I saw here? I saw a pin bar hammer. You can see that pin bar. You can see the hammer there. This is a hammer. It's a bullish move on the falling market. So this is where I'll take my trade. Take my trade on this bullish hammer here, and my stop loss will be below. So guys, you can see that, right? Then for your take profit, taking profit, there are different ways you can use to find the right place to, close your trade. You can use the Fibonacci. There's one other method you can use. You can pick your trend line, draw from the lowest peak to the highest point where it started to retrace, before it started to fall back, from this place. Then you can take this and measure right the same distance. You can tell how far the market will go. So your take profit can just be not at the tip, just below this point. It's just right. It's just okay. Then something else you can do. This trade is going to last for days, right? Something else you can do is you can use your Fibonacci. Draw it from the peak to the bottom of this. To know how far the trade market will go up. You can see it's going to right over 161 paper. And taking it to the market, taking the trade just at the first level is just okay. And you can decide to go all the way. If you want to stay that long in the market, then probably you have to enter more than once, at least 2 or 3 times, so that your first trade closes out 1 to 1.7, and you let the other one run till you closes at this level. So guys, that's how to trade in a crash. Do not forget to subscribe. Do not forget to like, and do not forget to share. Leave comments on the video below if you don't understand anything. I'll do well to come back and explain. So, peace guys.